99 Speedmart Retail Holding Berhad was found in 1987 by Lee Tiam Hua. The company started as a small grocery store and has grown into one of the largest mini-market chains in Malaysia. It offers a wide range of daily necessities including groceries, beverage, frozen food, personal care products, and household items. The company is well known for its affordable price, convenient store location, and efficient operation. Despite competition from the retailers such as Maiden, Econsafe, and Lotus Malaysia, 99 Speedmart continue to maintain a strong market position and customer loyalty.
Assalamualaikum, my name is Fahim and I will present the liquidity and profitability ratio of 99 Speedmart from 2021 to 2025. First, looking at the liquidity, the company faced a tight position during 2022 and 2023, where the current ratio was near 1.0 and the cash ratio dropped to a low of 0.08. However, management showed great resilience by executing a strong recovery in 2024 and 2025. By the 2025, the current ratio stabilized at 1.05, heavily supported by net working capital, which surged to 1.0 billion ringgit, proving the company can easily meet its short-term debt. Second, on profitability, the gross profit margin improved significantly, peaking at 42.7% in 2024 before settling at 31.8% in 2025. While the net profit margin remains tight but steady at around 4% to 5.4%, which is normal for high volume retail. The return on equity remained exceptionally strong at 47.4% in 2025. The proof 99 Speedmart is highly efficient in generating high return for its shareholders. Now I will hand over to Daniel.
Thank you, Fahim. I am Daniel and I will cover the leverage and operational efficiency ratios. For leverage, 99 Speedmart has managed its debt risk excellently. The debt to asset ratio decreased consistently from 0.36 in 2021 to just 0.23 in 2025, meaning the company released more on internal equity rather than external debt to fund its expansion. Furthermore, with an interest coverage ratio of 9.78 times in 2025, the company earns more than enough operating income to pay its interest expense, making its default risk extremely low. Finally, for efficiency ratio, as an FMCG mini market chain, 99 Speedmart maintains an average collection period of less than 1 day, since most sales are direct cash transactions. For stock management, the average age of inventory reached its best efficiency in 2025, where goods were held for only about 0.11 of a year before being sold. This fast turnover minimized holding costs and speed up cash inflows. In conclusion, our ratio analysis proves that 99 Speedmart is a highly stable, low-risk, and efficient market leader. Thank you.
Based on our financial forecasting analysis, 99 Speedmart is expected to achieve revenue of RM9.19 billion in 2026, representing a 10% increase compared to the previous year. This projected growth is driven by strong consumer demand, continuous outlet expansion, and the company's ability to maintain customer loyalty through affordable pricing and convenient store locations. In addition, the company is forecasted to generate a gross profit of RM 1.06 billion and a profit after tax of RM 505.6 million. This result indicate that 99 Speedmart is likely to maintain strong profitability and stable financial performance in the coming year. Overall, the forecast demonstrates the company's positive growth prospect and its strong position within Malaysia's retail industry.
Based on our financial forecast, 99 Speedmart is expected to improve its profitability due to strong market demand and effective cost management. However, the company may face several challenges in the future, including inflation, rising rental and utility costs, and increasing competition in the retail sector. To overcome this challenge, the company should continue improving its supply chain efficiency and inventory management. In addition, investing in digital transformation and expanding strategically into new markets can help strengthen its competitive position and support long-term growth. Moving on to the conclusion, 99 Speedmart demonstrates strong potential for future growth and sustainability. Based on our forecast, revenue is expected to increase by 10% to approximately 9.19 billion in 2026, with an expected profit after tax of 505.6 million. This positive performance is supported by outlet expansion, strong customer loyalty, and operational efficiency. Although the company may face challenges such as competition, inflation, and rising operating costs, its affordable pricing strategy, strong brand reputation, and convenient store location provide a competitive advantage. Therefore, 99 Speedmart is well positioned to remain profitable and continue growing in the future.
So we're moving on to the future financial outlook for this company, which is Speedmart. So based on the performance of liquidity of Speedmart, it shows a pretty strong recovery from for the current ratio. It improved from 1.0, which is 2023, to 1.74 in 2025. And then for the quick ratio, Speedmart rebounded from 0.14 to 0.78 in 2025. So next, for the cash ratio, it rose from 0.08 in 2022 to 0.72 to 2025. So it shows that the company is better positioned to meet short-term obligations, but still below the ideal benchmark of 1.0 for quick and cash ratio. So the future focus is to strengthen cash reserves and receivables to secure more liquidity. Then we take a look at the profitability outlook. So for the profitability, Speedmart gross profit margin peaked at 42.7% in 2024, then low back to 31.9% in 2025. So it decreases there. And then for the net profit margin, Speedmart recovered from 4% in 2022. Then it rises to 5.5% in 2025. So the future focus is Speedmart should maintain cost efficiency, and maybe they can try stabilize margins to ensure sustainable profitability. So for the asset and equity returns, its return of assets surged to 32% in 2023, and then it plummeted and fell to only 5.8% in 2025. So it shows a weaker asset efficiency. Then for the return of equity, it peaked at 73.9% in 2023, but it got corrected, which is lower to 47.4% in 2025. So the future focus here is maybe they can try to improve asset utilization and stabilize equity returns to reduce volatility.
Based on our analysis, the future financial outlook of 99 Speedmart is positive. Firstly, the company continues to expand its store across Malaysia, allowing it to reach more customers and increase sales. Secondly, the demand for daily necessities remains strong because consumers need this product regardless of economic condition. In addition, 99 Speedmart has built strong brand recognition and customer loyalty over the years. Therefore, the company has good potential to increase its revenue and strengthen its market position in the future.
Next, I will talk about ethical requirements of interpreting and presenting financial data accurately. The first one is accuracy of data. Ratios such as the current ratio 1.74 in 2035 and quick ratio 0.78 in 2025 must be reported truthfully. Ethical reporting ensures investors see the company's real ability to meet short-term obligations rather than inflated figures. Next is transparency. The report clearly shows formulas such as current assets divide current liabilities. Transparency in methodology allows stakeholders to understand how results are calculated and prevents interpretation.
Compliance with ethical standards. When presenting figures like the debt to equity ratio falling from 1.14 in 2021 to 0.51 in 2025, compliance with standards such as IFRS, MFRS ensures consistency and reliability in financial reporting. Responsibility to investors. Trends such as the net profit margin dropping from 0.53 in 2021 to 0.04 in 2022, then recovering from 0.054 in 2025. Must be disclosed honestly so investors can make informed decisions. Integrity and trust. Integrity is shown when weaknesses are reported, such as the sharp decline in inventory turnover from 8.82 in 2021 to 1.91 in 2025. Hiding such data would damage credibility and investors' trust.
The danger of earning shenanigans or manipulating data to mislead investors. First one is profit manipulation. If the company were to hide the low gross profit margin in 2022, which is 0.09, it would create a false impression of operational efficiency. Next, misleading investor. Investor could be misled into believing the company is financially stable when in reality the account receivable turnover dropped drastically from 127.9 in 2021 to 32.26 in 2035, showing weaker collection efficiency. Third, legal risk. Manipulating figures such as ROE, which fluctuated sharply from 0.3739 in 2023 to 0.474 in 2025 could expose the company regulatory investigation and legal consequences. Next, reputation damage. Concealing issue like negative account payable turnover, which is negative 8.52 in 2023, would eventually harm the company's reputation once revealed, as it signals poor supplier payment management. Lastly, long-term consequences. While manipulation may show short-term gains, the reality of weak liquidity, For example, cash ratio only 0.09 in 2023 highlights risks to long-term sustainability and industry stability.